As you've probably heard, Bitcoin approaching a death cross. The spookiest sounding technical thing ever, the death cross. So, if you've been in crypto for a year, you've seen the market go up, virtually just up, only up. Last month in May on the 19th, we saw a sell-off. We went from a high in April of 65,000 down to 30,000, very spooky. Everybody has been calling for lower numbers since. They have not come. We can consider this on June 15th a slightly higher high. A back test of the 20 weekly would bring us up to the fabled 48.8. Lots of things on this chart. Lots of things are pointing to this 48.8. This is the most important value in my mind. The odds of us touching 48.8 before any kind of downside continuation, well, and obviously upside, is very good in my mind. In that same sense, this chart still looks like crap. We don't have any mega bullish signals. We don't have any once in a lifetime thing flashing, as you may have read on thumbnails, other channels. We really just have what is a terrible looking chart. We have some technicals and we have some observation that suggests we want to see a relief rally. Not even want to, but markets don't have to do anything. I think that I'll put out there. They don't have to do anything, but they tend to follow certain patterns. One of those patterns is, well, whenever you see a move in one direction, you tend to see a retracement back in the other direction. Let's throw up some of this reasoning. I haven't gone in depth on this in a while. If we take our Fibonacci retracement tool, place it on the highest point in April and the lowest point in May, one of our most favorite retracement levels, the 618, the golden retrace, sitting at 48.1, just underneath the 20 weekly. There we go. On the daily, we crack open our Ichimoku cloud indicator right here. A fat, flat, thick cloud. These tend to be attractive or magnetic points for price. Certainly, again, nothing has to happen, but it tends to move in a certain way. So we have the Ichimoku cloud on the daily, 47.2. We have the 618 retrace on the logarithmic chart from our highest point to our lowest point, 48.1. We have our 20 weekly moving average right there at 48.8. All roads seemingly lead to this value. It's there. There's liquidity there. Institutions are going to look if they do want to short. Here's the problem. Here's the problem with the idea that Bitcoin's just going to break straight down from here. Institutions, big players, need liquidity. They may have shorted here, and they may have shorted here, but there isn't going to be enough liquidity here. They need buyers. Sure, there were some buyers. Definitely were some buyers, and we see that because price didn't keep dropping. But in order to go lower, I speculate that they need more liquidity. As you probably know, institutions and big players, they're always long and short. They're almost never just one side of a trade and often net neutral. They may need more retail longs to fill their shorts. Where would that be likely? If you saw price shoot up to 48.8, just under 50,000, how would your sentiment feel? Would you feel a little more bullish? You think long is a better idea? Probably. I think that's a common response to price going up. Right near that 50, you're thinking, I can get in before 50. That's where the liquidity is. They need buy orders to fill their short orders. Every trade, two pieces, a buyer and a seller. 48.8, that's my speculation. If that is the plan, that could be where we see this sell-off. I don't believe we're going to see this. But without that move to the upside, without whipping the market back into a little frenzy, not going to be enough liquidity. That's really, at this point, how I see it. And I think I can justify that by saying price has traded sideways. Big players aren't interested in dumping this right here. They might be up here. As you've probably heard, Bitcoin approaching a death cross. The spookiest sounding technical thing ever, the death cross. You guys know I don't like calling them that because I believe they invoke unneeded emotion. It's just a bearish cross. Just a bearish cross. That's it. Same way, golden cross, just a bullish cross. Keep the emotions out. We are quickly approaching the 50 and 200 daily moving averages looking to cross bearish, quickly approaching. I'm estimating at the trajectory they're at June 20th. If you went to trading school and you were in kindergarten, that's probably one of the first things they'd teach you. However, we don't see markets play out quite that simply, unfortunately. In Bitcoin's history, we have seen many crosses. My memory always goes right back to October of 2019. We had death cross pumped right through it. We got that huge rejection wick, sold off, retraced it. We were still in the bear market. February 18th, 2020. We got a golden cross that we dumped to 4K, 3,800. What I'm showing here is not that you should always bet that the crosses aren't going to play out. I'm not saying that. But what I am saying is that they are certainly not to be taken as a definite signal, as a definite indicator. Here's 2 examples in a row where they didn't play out the way that they should. Patrons saw this, but I'll share it with the world now. Gold. Probably been hearing a little bit about gold recently. It had a nice little rally there into the end of April or end of May. Sold off in the last 2 days. So there's something really interesting that you're going to want to see. I don't know if anyone's noticed this yet. That's what we do here. So here's the interesting part. We have Bitcoin on our left. We just looked at that. Gold on our right. This is intense dumping for gold. January 8th is really the only candle that comes close, minus 3% in a day. We saw 2.5 and 2.14 back to back. So what's our takeaway here? Gold, bullish cross dumped. Bitcoin, bearish cross. You see where I'm going with that? How do you cut it any other way? It's like, does Bitcoin have to trend with gold? No. But this is such good timing for this to happen. We're seeing 2 assets that are commonly compared, showing exact opposite signals. And gold dumps through its golden cross. Does that suggest Bitcoin is going to pump through its death cross? We've seen it before. We know that moving averages are not reliable. The crosses are not really, at least on Bitcoin, we've seen them bamboozled too many times to say, well, this means it's going to dump. I think that this is a logical piece of evidence that Bitcoin is looking to make a move to the upside. Does not guarantee, again, we have that 20 weekly, we have that range. Doesn't guarantee that we fly off into space. It's possible, but it does suggest that, hey, we might be looking to move to where you think we are. It's just another piece of wonderful evidence. I don't know if anyone else has pointed this out. Have you guys heard this before? Is this cutting edge TA? Is this cutting edge TA? Benjamin Cohen mentioned that the next to death cross is a possibility of price pump before the cross. I mean, sure. That would then imply the opposite as well, that a golden cross may dump before it and then pump. Sure. There's just not a lot of value in the statement. I think the value is mostly just, hey, be prepared for anything. Because I think what we can take away is that these crosses on the daily are pretty volatile. We have 2 examples where they moved inversely, but they were big, strong moves. We're in the sloth market, the snail market. So a volatile move sounds amazing. I don't even care if I'm wrong. I don't care if it dumps, doesn't go to 48.8, like anything other than this. I'm so bored.